Good evening friends. The Finance Bill 2023 has been passed by the Lok Sabha and would be enacted very soon, and as always it has been passed with amendments vis-a-vis that which was proposed by Union Budget 2023. There are 5 major amendments under GST which we will discuss in this video. But before that, certain provisions which were represented by the industry in post-budget memorandum but which still sees itself in Finance Bill 2023 as it was there when proposed in the Union Budget. First and most important is that from 1st of July 2017, a sale when the goods are imported and stored in a bonded warehouse, that sale continues to be a exempt supply with retrospective effect from 1st July 2017. However, with retrospective effect, that would be considered to be as an exempt supply under section 17 subsection 3 from what it is seen as the law stands today. In case this happens, then there would be a requirement of ITC reversal in this case, and the applicability of interest again would be litigated. So as it stands now, this provision which has been inserted and retained in Finance Bill 2023 needs to be relooked at, and the impact needs to be calculated by industry in case it sees light of day in the same form in which it is. And most important is if it sees itself in the same form with retrospective effect from 1st July 2017. CSR expenditure, input tax credit, continues to be blocked under section 17(5) clause FA, which was proposed by the Union Budget 2023 and has been retained even by the Lok Sabha, and it is expected that it would be enacted and notified also. Another important amendment is under section 23. It was understood that while amendment proposed in the Finance Bill 23 in the Union Budget, all the taxpayers who are supplying goods or services which are totally exempt but who are receiving certain services liable to RCM, they would not now be required to take registration just because they are liable to pay RCM. However, section 23 has been re-amended, and now section 23(2) has been amended, wherein it is specified that not all such taxpayers mandatorily required to take registration under 24 would be exempt, but such class would be notified separately. Therefore, we have to wait for that notification. In case it does not notify, that the recipients of service liable to RCM would not be required to mandatorily take registration under section 24. A proposed amendment in section 23(2), then the provision would stay as it was before. Next amendment is section 30 of the CGST Act, and this is a welcome amendment. It has been always an observation of the high courts that even in case a RTP whose registration is cancelled applies for revocation after the mandated period of 30 days under section 30, he should not be left remediless and he should be allowed to continue to do his business if he files the GST returns and pays his taxes and penalties as invoked. Now, after amendment of section 30 wide finance bill 2023, which would possibly be enacted soon, such taxpayers whose registrations have been cancelled, the time period and the process to be followed for application for revocation of cancellation would be notified separately. Therefore, it is understood that even in case a taxpayer delays in filing for revocation of cancellation, there would be a opportunity of being heard, and in genuine cases, even after the delay, the registrations would be revoked. Section 62 for assessment of non-filers required that even after the notice under section 62 requiring a non-filer to file his returns, even after the notice, if the non-filer does not file his return, then a best judgment order would be passed, and thereafter appeal was the only remedy. However, now via a welcome amendment to section 62, it has been provided that even after the assessment order, if the taxpayer files his returns, then such assessment order under best judgment would be set aside on filing of the returns. However, interest and penalty or late fees need to be paid. Now, whether this interest would be on the best judged tax or the self-assessed tax in the return, that would be clarified going forward. Section 13 subsection 9 of the IGST Act has been scrapped. Now, in case the recipient or provider is in India and one of them is out of India, and there is a transportation of the goods other than by mail or courier, for example by a freight and forwarder, then the place of supply for such transportation of the goods would be the place of the recipient. So, for example, in case a manufacturer in Odisha hires a foreign freight and forwarder to transport its goods, then for such service rendered by the freight and forwarder, the place of supply would be the place of the recipient of the service, that is Odisha, and input tax credit can be so claimed. So, this anomalous provision has been scrapped out, just like proviso to section 12 subsection 8 was scrapped off via Finance Bill 2023 as proposed in the Union Budget. Friends, the biggest amendment in GST is the amendment of section 109 and 110, which lays the foundation of formation of the GST tribunals, which was now not a demand, but it was the need of the hour. Already more than 30,000-40,000 matters across the country are pending after disposal by the first stage to be filed in the tribunal. There was a deadlock between the centre and the states on whether the tribunal would be a national tribunal or a state level tribunal. Now it has been proposed after consensus with the states that the GST tribunal would be a national level tribunal with the national tribunal bench at New Delhi, and there would be coordinate benches in the states, just in the fashion like income tax appellate tribunal. However, a midway solution has been reached, and for each of the state level benches there would be 4 members, 2 judiciary, neither from centre nor from state, as judiciary members are expected to be independent, and 2 technical, 1 from centre, 1 from state. However, the matters which are more than 50 lakh rupees of disputed tax, ITC or penalty would be decided by a bench of one judiciary and one technical member, and less than 50 lakh would be decided only by one member. However, most important point for the taxpayers is that in case these two members do not agree with each other, then the matter as per the direction of the President in the national bench would be transferred to another bench within the same state. If there is no bench within the same state, then it could be transferred to another state also. And after the decision is reached by such new bench, then the majority view would prevail. So, taxpayers need to be ready that their cases can even be transferred outside their home state. In such cases, the national bench at Delhi, that would be hearing exclusively on the place of supply issues. However, it is not that it will hear only on place of supply issues. It is open that it may hear any other issue also. However, state level benches would not hear the place of supply issues. So friends, while this is a very important and much needed relief for the taxpayers, yet still there is some time for formation of the tribunal, because appointment of the members as per section 110 as amended needs to be done, and we should see that by the end of the year possibly the tribunals are formed. However, the state directorates as well as the commissionerates of the center, in certain cases which are disposed of by the first stage in favor of the revenue, they have started recovery proceedings. However, there has been various decisions of the high courts, and now it is accepted by the authorities also that to get a stay, you have to pay that pre-deposit which you would have paid had the tribunal been formed. So, to get a stay in these matters pending formation of the tribunals, you have to pay 20% of the disputed tax liability, and possibly you would not require to go to high court, at least in those stages where high courts have held accordingly. So friends, we shall wait for the enactment of Finance Bill 2023 and thereafter notification by more than 50% of the state legislatures before all these amendments are given effect to. However, taxpayers need to take these amendments into consideration and prepare from now for these further amendments in the GST law. For the time being, thank you very much. Stay tuned. Do share this video for maximum dissemination of knowledge and like this channel. Thank you very much.